Welcome back to Market on Close. It's time to look at an overlooked stock. I don't know how overlooked this is, but they did have earnings. So they had some news. Stock was down over 1% today. Let's bring in George Tsilis, senior markets contributor here on the network. George, give me the breakdown. I looked at the, the results. They didn't look horrible, basically in line, maybe a little bit of a slight miss. But give us the breakdown here on SLB.
Well, I mean, for Schlumberger, obviously, if you look at the trend, it's been actually quite poor in the last year and a half or so for this name. And there's obviously a lot of capital expenditures going into oil field service equipment and production. And that's, I think, depressed crude oil prices. And that's, of course, translated into Schlumberger's underperformance. But this is really, a stalwart company, a global oil field company that operates in 100 countries. And they do everything from upstream and midstream, everything from well construction, reservoir performance, and production services for oil and gas primarily, and hydrocarbons. And they posted earnings per share and revenues, which actually came in just slightly less than the estimates for the quarter Q1, 72 cents versus 74-cent estimates. That was down about 2%, considering last year they earned about 75 cents. And then sales also came in just slightly below estimates at $8.49 billion versus $8.59. So they missed by about $100 million, and that's down about 3% compared to the same quarter last year. So they were already expected to be relatively flat to slightly down in both earnings and sales for the quarter. But overall, if you just look at the chart performance over the last year, it's down 30%. Year to date, it's also down 10%. And I think this is an interesting group right now for a couple of reasons, and it could be looked upon as potentially good or bad. One, I think that the cyclicality of the oil and gas space. The other thing is the industrial space is kind of tepid right now, and I think that speaks to potentially some slowdown coming up in Q3 of the economy, considering there may be essentially a pullback effect where all the consumption and CapEx spending for businesses, or not all of it, but a lot of it, that were expected to come in Q3 are now pushed forward into Q2, and that might actually create a cyclical contraction, at least in a one-quarter basis for Q3. I'm talking about the economic growth now. And so that might be impacting the cyclical nature of these businesses, oil, gas, industrials, materials, and so forth. But at the same time, the company did purchase, a chemical producing equipment company called ChampionX. This was last year. It was an all-stock transaction, and that has actually put some pressure on the shares in the past year and a half. And I think that's also something to consider. They do expect about $4 billion in additional net income as a result of this deal in 2025, and I think that's been overlooked, particularly in the past few months or so, considering the context of how the stocks have been down and also this name down, like I said, about 10% year to date.
Yeah, and from a year and a half ago, this stock was trading $62, George. We're off 44% from those levels. You look at this. They're very shareholder friendly. This company came out and said they're going to return a minimum of $4 billion to shareholders in 2025, 3.3% dividend yield, George. But this is kind of, we've been talking about safety plays in the markets, maybe a little bit of yield, but doesn't seem to be helping the stock at this point.
Yeah, you're exactly right. It's a good point to bring up. I mean, you have to consider yield, and that's certainly something you can achieve here with Schlumberger as an investor. They offer a dividend of about $1.14. And if you look at that relative to this year's estimated earnings at $3.43, it's about 30% of the total. So for what it's worth, you earn a yield on this stock. It hasn't helped it. And, you could also consider the aspects of, is it growing at a reasonable price? Well, one of the things I noticed is that they are expecting this year's sales to be less than last year, but still above its 5-year average. But you could also make the case that is conditioned upon the acquisition of ChampionX last year. But at the same time, the EPS this year is expected to be lower than last, but still very close to their 5-year averages. It's trading as a stock right now. This year's earnings at around 10 times, next year around 9.5 times, forgive me. That's about 50% less than the historical average of around 21 times earnings. So for what it's worth, it's starting to reach some valuation, compelling valuation levels. And the other thing is that, the last, month has been very bad for the stock, but typically, this is based upon an exogenous event. Typically, it trades right around its 10-week moving average or close to it. So as of right now, at least in the past couple of weeks, it's diverged away quite a bit. So you may see some mean reversion in that regard. And lastly, I'll say this, also from a seasonal standpoint, it's interesting to see how the oil and gas space and also the oil service producer equipment companies like Schlumberger, they do well in Q2, so that we're talking about as we move into the summer season, and then also Q4 near the end of the year. So maybe one to watch as it retraces potentially to that 10-week moving average, but also as we move into June and July, where typically we see some seasonal push in these names. This is, again, in general, not saying it's going to happen in this name, but it's something to consider.
Yeah, that's a good point, because I looked at over the past year, it seems like every time, it's been in a downtrend, but every time it downtrends, there's a point where it just picks back up, it ramps back up, then falls back even lower. Fits and struggles for this company. Yeah, you can see it right there. It does rally back from dips, but then the momentum is still to the downside on this one, but valuation's looking compelling here. All right, great stuff. Thanks to George Tsilis, Senior Markets Contributor here, breaking down SLB.